Hey guys, if you are on the fence of whether you should buy a stock or not, here are 3 questions you should ask yourself right now. Number 1, do I need any of this money to live on in the next year? If the answer is no, you can move on to the next question. Second question, can I hold for 5+ years? If the answer is yes, then this is a great time to be dollar cost averaging, because the third question you ask, are stocks off of their highs? Am I getting a good price? Am I getting a discount? And when you look at a lot of these valuations, especially the mega caps right now, guys, their valuations are good now. And so it checks all the boxes where you can slowly dollar cost average. This is the problem most traders or investors make, is they put it all in, they get excited and they put it all in, and then they don't have any more money to buy if it goes lower. Okay. The stock market doesn't always go up when we want it to, even though when we buy, we expect it to, right? We're impatient. We think once we buy, stocks are going to go up immediately. But you got to hope for the best, plan for the worst. That's why you do a very slow process with your dollar cost averaging. And that's why I put out several videos in the past. Let's say you want to put $10,000 in the market. You don't put it all in at once, obviously. You don't even put 5,000 at a time. You break it up to small increments. So start with 500, for example. And then if stocks go lower, let's say a couple weeks from now, you put $750 in. And then if it goes lower again, you buy $1,000 worth. And then if it goes lower, you buy $1,500, right? So something like that, where you're slowly increasing, the block of shares that you're buying. And then by the time, a couple quarters pass by, we should be out of it, but you never know how long it will take. Okay, but that's why I'm saying, if you don't need the money to live on for a year plus, ideally 5+ years, then you have nothing to worry about right now where the stock price is. It's just an opportunity to dollar cost average, because when we do come out of this, when tax cuts happen, remember, anything positive with all this negativity baked in will get stocks going back up, okay? I'm not saying it's going to happen right after the tariffs. There will be retaliation. There's going to be all sorts of uncertainties, guys, and fear. But I do see some sort of relief rally, and then we got to watch the data in May, because that's when it may start coming in weaker. And stagflation, we know, is an issue. But the main thing I'll be watching is earnings season, which you guys know. We got to watch the guidance of companies. If they are lowering their guidance, most likely these stocks are going to go down, but that will be a reset there, and it'll be much easier to beat those numbers, moving forward. But one positive thing I can see coming from earnings season is companies buying back their own shares, especially the big cap and mid cap companies that have a lot of cash on their balance sheet. They may elect to buy back their own shares because they're at a discount now, and that could be one positive catalyst for stocks to rebound, after maybe they have a bad report. So after earnings season, you may be able to get some really good deals on stocks. And obviously, if you do see one of your favorite stocks that does beat and raise guidance, those are the ones you want to be in, obviously. Okay, not the ones, that are lowering, unless, like I said, you're going to be playing it long term, in the best of the best names, like the Millionaire Maker stock portfolio, for example. Okay. And of course, you guys know I'll alert you on that. So remember, keep that mindset, guys. Remember, stocks are at a discount only when sentiment is bad. You're not going to get great prices when everything's, peaches and cream, when everything's going smoothly. So if you want to get those bigger returns later, you got to buy into the fear and the uncertainty now over the next couple of quarters.